Rima, we've seen not only in tech but across sectors, earnings momentum and the upgrade direction goes along with valuations. So when you see earnings getting upgraded, you see valuations also moving higher and higher, and vice versa. So I think I'm not very finicky about absolute valuations in any sector, not only IT. I am more finicky about the direction of the earnings momentum. And in the case of IT, it clearly looks like we are in for a negative earnings upgrade, or rather a earnings downgrade cycle. Yes.
And how bad could it get, the earnings downgrade cycle? Are we closer to, the bottom in terms of the bad news?
I don't think so. I mean, maybe we are, but I would not call the bottom now, because I would typically look at the US economy, and I'm reasonably sure that we are not past the woods as far as the US economy turnaround is concerned. Probably things may get worse before they get better. And if you look at all the data points, the one data point that I would look for as a good signal from Indian IT companies is the hiring. Not the order book, nothing else, is the hiring. And if you see for the last couple of quarters, hiring has been flattening off, which means that companies are really cynical or skeptical about the next 3 or 4 quarters as far as the ramp up of demand is concerned. So while order books are there is still order wins. There is always a chance that orders can get elongated or postponed or even cancelled. So the hiring number, if you see for the large companies, has been quite flat for the last.
So you stay underweight, and
Exactly.
you think things could go worse.
Also because of ChatGPT, right?
ChatGPT is another threat, but probably.
Do you think it'll really explode into something? I mean, it's not just ChatGPT, because everybody's trying their own ChatGPT, right?
Sure.
And the news flow, at least there, has exploded, and it's all under the surface.
Yes.
With IT companies. Although TCS, I think, did tell you, Rima, in the morning that with clients, that's the conversation which is happening.
Correct.
Can it really be a big threat, according to you, from what you're reading, what you're
At least from the initial readings, it looks like it can be a big disruptor. I think threat is not the word; it's a disruptor.
Sure.
Because you can have people being able to write code without knowing coding. And the level of kind of layers of intelligence that are being built in even as we speak, and we are only talking about Chat 3.5.
Yeah.
GPT-4 is even like multiple times powerful, and apparently in December we'll have GPT-5, which can be used for multimedia inputs and outputs. So I think it's a big threat, and in the next 1 or 2 months I think I'll be able to form my views. But right now it can potentially be a big disruptor. Yeah.
All right, I think we have gone on enough about tech. So let's talk about the banking space, Nimesh. AU Small Finance Bank, the top boss get an extension of 3 years. The street light.
It's always I've been here for long enough to figure it out. Hopefully, know something about it. One is it's always easier to outperform in a trending market.
Yeah.
So if you look at the big periods of outperformance by active managers, it's periods like 2003 to 2008. Big outperformance. From 2014 to 2018.
Yeah.
Significant outperformance. From the bottom of 2020 till say about the middle of last year,
21.
there was a period of outperformance. So it's easier to pick stocks and trends in a trending market. So that's one. Second is, I think, if you look at the trend again, these are also the periods where mid caps and small caps have done better.
Yes.
So when the mid cap and small cap space is working well, you always have the asset allocation to spice up your portfolio to put something into the mid and small cap space, even though your mandate might be dominantly large cap. So that's extra kicker comes from the middle and small cap space. But that confidence you typically have when the markets are reasonably bullish or at least not negative. If you look at the sharp periods of underperformance, it's basically periods like 2018 to 2000, almost 20,
Yes.
almost 2 to 3 years, where the mid and small caps got really smashed, in that period. So I think it's easier to outperform when it's a stable and a reasonably rising market. Periods of choppiness tend to, bring out the underperformance patches. That's one. And second is, I think inherently most fund managers are growth biased.
Yeah.
So if you look at specifically the last 1 year, growth has underperformed value.
Yeah.
Right? The value stocks have come back after a long time. The commodities, the cheaper PSU banks, for example.
ITC.
Yeah. So the point is that inherently, I think we are genetically growth investors. Maybe growth at any price. Some are growth at a reasonable price. But those are the kind of characteristics I would say. But in the long term, if the Indian economy is to be considered as a growth economy, then I think there is enough scope for stock selection and to generate that outcome.
Najil, by the way, that data includes fees or not? Doesn't include fees. That's the golden number.
It should include fees, of course. Yeah, it's post fees, of course. So fees, of course, is a big drag. So that's
a
to
big
beat that to beat the benchmark.
Yeah.
Okay, gentlemen.